This is the art of startup war. And my name is Brian McMahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. The Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. So welcome back. It is another week on the Art of Startup War. You have got Brian here again with another phenomenal guest. Again this week we are going to focus on cryptocurrency, and we're going to focus specifically on ICOs. Now, you're all used to us talking about venture investment. You're used to us talking about angel investment, every other type of investment. You are not used to ICOs, which are initial coin offerings and are an extremely lucrative and positive way to raise capital for your business if you fit within a specific criteria and target. If you don't, and you just have a normal business and you think you're going to turn it into an ICO because you're going to raise more money, well, then you're just a schmuck and you deserve not to make it. But if you have a great business with a great project and it's relevant, then you definitely want to look at this. So all day today, we're going to be talking to one of the top people over at the Funding Tree, which is Ryan Arif. And welcome to the show.
Welcome. Thank you for having me on your podcast.
For sure. Look, tell me the history of you and blockchain and crypto and the Funding Tree and how it all came to part, first of all.
Well, that's a great question. How long do we have?
Like life.
Oh, perfect.
Life.
Okay.
Everybody else gets bored after 40 minutes, but I don't.
First of all, I'm really old, so that's why I wanted to catch up on the history. I'm old enough to have gone through several innovations that have failed, worked, probably more failed than worked.
Yeah.
Also dumb enough to have gone and invested in the initial .com era, the subprime mortgages, and now the blockchain technology.
Yeah.
So, my background is always I've worked for Kodak for 23 years. That gives me kind of a perspective on life in that there was a technology company in a traditional sense that everything that they did was done at corporate levels. Yeah. Now we live in a world where technology is accessible to everybody. Yeah. Today, we have more power at our fingertips versus what Kodak and any one of these corporations had back then. Yeah. If you try to equate back to the differences in technology, we were based on two blocks, about 6 floors, and about 100 computers that processed our entire manufacturing operation. Yeah. Now today, that same power is on an iPhone.
Yeah, and
so
it's incredible.
That's the kind of differences I've gone through.
So is blockchain, is it like Internet 3.0? Have we moved on in such a massive way? Because it almost seems like we have, if I look at what's gone on in the last 6 months.
Well, I think it's, we talk about, paradigm shifts, and this is definitely another paradigm shift in that just like the, internet changed the way we did things, the way we shared information, the way digital information was being able to be shared. Now, this is another shift in that the way we're going to distribute information and process things. So it is definitely another step, but how we get to that other step is still in the very early stages.
And you've moved all in with Funding Tree, right?
We moved all in.
There's no, I don't know, I'm just going to see how it goes.
For us, Funding Tree,
the ultimate funding marketplace with blockchain technology.
Exactly.
Like, there is no room for confusion here.
There's absolutely no room for confusion, and we can continue to do, and a lot of companies even at the highest level are continuing to deliver capital in the traditional way. I mean, if you look at even in venture capital, the way it's delivered today, it's still very old school. You get together somewhere, you meet people for lunch, you talk to them, you share some information, and maybe 6 months later they might like what you do, or they might not like what you do.
Yeah.
We can speed up all of that process. So for us, going all in meant that, look, we really have to look at this technology in all seriousness to see if it will work for what we're trying to do.
Yeah.
There are a number of problems in the way capital is deployed. On the one hand, we have trillions of dollars. On the other hand, we have people, needing millions and billions of these funds, and yet there's a mismatch, and it doesn't get delivered in a very efficient manner.
Yeah. And does blockchain solve that?
I think it goes a long way towards addressing many of the problems. And I think if you have to approach this technology in that light to say, okay, here's a problem that we have today. Will this problem fix that? Or will this technology fix that problem? If it does, you have to put it to test. You have to make a use case for it and test it out in the marketplace.
Okay.
And it has the potential, but again, the important part is user case and test and validate the market.
I like that. And then just maybe go a little bit deeper into funding tree. What is your end objective, and what type of companies are you looking for? Maybe talk a little bit about the process.
So we want to start off initially focusing on the real estate market, because that in itself is, a few $1 trillion worth of market where, traditionally majority of the technology has gone into marketing, into social media, into how you find listings, how you, engage with customers. But a lot of that technology hasn't been deployed at the transactional level. In other words, where there's inefficiencies.
Yeah, which there are massive
And there are massive amounts of inefficiencies. To give you an idea, the reason why I focused on, obviously, real estate is because that's been my background for the last 20 years. I've been heavily involved in, if you think about money as the product, right? A lot of people don't realize that the product being money is actually accessible to everybody, yet we struggle to deliver that product to people. Now, if you had other products and we had shelves full of these products, we'd say, crazy, why are you stocking shelves full of this product if you're not selling it? But money is stocked up in shelves up and down all over the world. And yet we don't deliver it in a very efficient manner. So I always look at money as a product.
That's interesting.
And we have to find ways to deliver that product. Now, obviously, the way the system works is that your idea has to fit the product's criteria to be able to access that product. So we have to think in terms of, it's there, it's available on shelves, how can we make it accessible? And that's where you try to work on the friction side of the problem.
And you look at all of the frictions within the real estate space. And there's so many obvious ones, whether it's from escrow all the way through, where you can incorporate blockchain with companies that will obviously need a lot of investment to get them to the next level.
And that's exactly right. So if you look at real estate in its entirety, it is process driven. Something has to happen first before the next step can happen. And, if you imagine the very first step is there is a listing contract between an agent and a seller. Once, a transaction takes place between a buyer and a seller, there's a purchase contract. Then there's some financing that takes place. So everything has to happen in a chronological order. Now, today that happens in a desperate way. There's disparate ledgers. Somebody has systems over here, escrows over here, banks over here, yet nobody has end-to-end visibility in this. So what we're looking to do is to create a frictionless system using the blockchain technology where we can take all these documents, and again, a lot of people mention that, blockchain and Bitcoin is all about ledgers and it's all about, the boring stuff. Well, if we take the boring stuff and put these documents in a chronological order, hash them, link them, and make them accessible to the people that need to know this information. If you're the seller, and there's a buyer and there's a bank, those are the people that need to know. Not everybody needs to know. If that information is recorded on a public ledger, that's when you say, the title information should be available. The blockchain allows us to control who has permissions and who has access. And again, some of your panelists mentioned, private keys and public keys. Well, those are ways to control access to information.
Yeah.
And so what we're looking at are ways to, streamline that operation.
Beautiful. And I know there's a number of ways that you'll work with people on the money side of it, like whether it's permanent funding they look for, or bridge funding, or private equity. Can you talk a little bit about just how that process works? Somebody comes to you and they say, hey, I've got this great solution for escrow. Right now, it takes too long, it's not trackable, it's a nightmare, we need third parties, and it's too expensive. And I've built this blockchain which actually makes it transparent and simple and easy, and it's not going to cost very much. But to create this properly, it's going to cost us $15, $20 million. So we need to do an initial coin offering. And you first look at it and say, okay, tick in the box. It is an initial coin offering. Like it fits into why a blockchain business should be created. What happens next?
Okay, so in this example, what we're looking at is that if we're using initial coin offering as a way to raise money, then essentially we first of all have to decide, what is the purpose of that coin. Right? So the coin initially would act as a securities token, right? So it's essentially giving people some rights to your company, right? And the second part of that, which is more of a utility function, and that's where you have to be clear on how you do this raise and say, there will be a potential utility function. Now, what is a utility function? In this particular case, the utility function is that when you do a transaction, that in itself creates a utility amongst the participants, the escrow company, the bank, the buyer, the seller, the appraiser, the person that does the inspection, the reporting. So all of those individuals can potentially benefit from having some stake as a utility stake in the company.
Yeah. So
these coins can then become a functioning coin that they can use to barter and trade services between each other.
I love it. And to give it, and it's so important what you say, because without the functionality of the economy itself, it doesn't work. So just for our listeners to put it into a very simple context, imagine you were creating a brand new country, and you go into a brand new country, and there's only two people in that country who require the currency that you have, and everybody else swaps sheep for chickens and chickens for cows, and they're never going to use it. Your currency is going to collapse. Your ICO is not going to be successful because you don't have a community that keep it working, right?
You absolutely have to have, the overused word ecosystem.
Yeah.
But you have to create that ecosystem within that environment.
Yeah.
So we're looking at obviously real estate, and that in itself can create an ecosystem where you have escrow companies that are part of that. You have banks that are part of that. So,
and they're all using the coin because they all acknowledge the coin is a quicker, faster, more transparent and simpler way to do business than using the previous currency they would have used.
Absolutely. And I think it's really important to think in those terms that unless you're able to create these services that can be traded amongst each other and are reciprocal in some capacity, then it will not succeed. A good example, if I could use that, is actually, this is my background in Kodak. Kodak launched a recent, they got in, announced they got into blockchain, and they're going to launch a coin. Yeah. Now, I know it's interesting. What I love about that idea, not just because I have a Kodak background, but because they're creating something for photographers. The photographers get to utilize these coins for digital rights. And then on top of that, Kodak are making accessible their products and services that people can use that coin for. Yeah. So in other words, you're actually creating a market saying, hey, by the way, if you help us build this coin, we'll let you use it over here. Yeah. And that's something that absolutely is a must. Without that, your coin is worthless. Yeah. It's monopoly money.
Phenomenal. I absolutely love it. And then, so once you've created that, you've established that that community will be successful, which is right at the beginning. And I love that you've said that before we do anything else. What then happens? Because I know you've had over 100 applications that you've reviewed for people who are looking for ICOs and for funding types of different levels. You've had 50 50 registered and 20 deals which you've had funding committed for. Like, I want to get in your mind and go through all of that.
The idea and the principle behind that is that, like anything, we're going to have to go through this process of curation and filtering.
Yeah.
Right? So you're always going to have to start with, look at 100 deals, find out.
But it's a crazy filter because you have 20% of the deals that the applications you're receiving, you've had funding committed for. Like, it's crazy good.
Well, I think some of that is, still numbers that we are playing with in terms of how we want. I think it's our ultimate goal to have 20%.
Yeah.
And I think, again, by starting off, first of all, even if we start off at the top of the funnel, today we push everything into the top of the funnel, and regardless of what it is, and then say we'll get down to 2 or 3%.
Yeah.
Well, why not create a system where you're not throwing rubbish at the top end? You're throwing good quality stuff that's already been gone through a process where they've already gone through some of the education and the learning and gone through incubators like this place to know exactly what stage you should be at before you start submitting your information.
By the way,
online.
I agree with you. That education portion is not discussed anywhere near enough, and it's not. I don't even want to point it towards us. I just want to point it towards like just knowing what you're doing. It's like going out to an oil field and trying to drill oil without ever having, after reading one book about how to drill your own oil field.
Right,
and people
right.
do it in startup all the time for ICOs and everything else. They read a book, maybe some lean startup book, and they go, "Oh man, this isn't so hard."
Right.
It actually is really hard.
But also though that we mentioned earlier on, someone said, "What's the number one thing? What's the first thing you look for when you're trying to evaluate an ICO?"
Yeah.
Well, the answer came back, people or team, right? When you look at a team and you listen to a startup and you start to listen to what they have to say, one of the first things that anybody smart enough to be, evaluating ICOs or any kind of startup will be, what are they actually saying? Are they basing their knowledge and information on some, thrown away comments or something they read over here, or are they very, presenting to you in a very intelligent manner with some, properly thought out idea, some research to back it up, some figures that they can support. So those then become your initial part of how you evaluate things.
Yeah.
And I think, again, that goes back to the education part, which is, hey, if your idea isn't properly thought out, if your idea isn't well researched, you don't have customer validation, you don't have all of these things, and you're out there telling everybody how amazing this technology is, and it has AI, and it has blockchain, and it has, every single thing, technology term, but who wants it? And so those are the things that you have to, look at in the beginning and say, okay, that's a good starting point. And again, I believe education is the key to getting those, because you may save those individuals from actually wasting a lot of time and money.
Yeah.
By saying, hey, let's get back to basics and educate ourselves first.
Yeah, I love that. It's really important. So we get the validation. We then make sure that we're the right people for the job, because sometimes we're not. Sometimes we're better off putting someone with a better skill set, actually either leading the company or leading the ICO charge. What comes next, especially when you're looking at the applications for the companies that you really like versus the ones that don't make it?
Let's put the blockchain hat on this. So, and what we're looking at, if you imagine there are two sides of the equation. There's the money and there's the people needing the money.
Yes.
Right? So one of the first things we're looking at is that on the money side, we have to take care of who the money providers are, what is their investment criteria, what are their specialities, and we have to validate them. We have to know exactly that this fund is not somebody telling me I have this fund. This fund actually is real. It's, owned by Sequoia, or it's owned by Fortress, or it's owned by Bank of America.
Yeah.
But they've gone through a validation process. Now, in a blockchain sense, we can bring them into this private marketplace because they've gone through this validation. And then we've also built a profile and characteristics for this particular fund. It's pointless going to Sequoia and saying, hey, guys, we want you to take a look at this, knowing full well that it's not even in their theme. they've never touched that particular type of startup in their life.
Yeah.
So the idea is to, first of all, understand exactly the full makeup of the funds, the credibility of the funds, and that the funds are validated.
And then you bring those funds into your marketplace.
So they're in the marketplace, right? And they've already gone through that process, and they understand, and they will have to understand how to operate in this blockchain principle, right? And then on the other hand, you have people that need the money.
Yeah.
So whether they're startups or whether they're established companies, and obviously in real estate, we say, look at the risk profile. Yeah. Right? If you're a ground up development, the risk profile is very high. Yes, the returns are amazing. You can get 40% IRR and you can make 20% cash. And so it sounds fantastic. Yeah. But what is the risk profile of that? Yeah. So you evaluate, first of all, the risk profile, the sponsor, their track record, their history. Have they just simply, decided that this is great, now I can raise money and build this project? Or have there somebody that already has a number of these projects under their belt, they have a nice portfolio, they have some cash flow already, they've been around a long time. So you look at those fundamentals, but you you evaluate them on the basis that there is some credibility here. Yeah. They're also the decision makers, and they're the owners of that asset, or whatever they're buying. Yeah. Right. They have the contract in hand. And so what happens in real estate world is that you have a lot of intermediaries, a lot of brokers, agents. Some of them don't even have the authority to submit this proposal to somebody, but just because somebody sent it to somebody who then sent it to someone else, it ends up being, it's like kicking a tire, Yeah. So, we have to eliminate that. If we are going to have a better matching system and a better deployment of this product over here, then we have to start at the ground
junk
level.
In, junk out.
Exactly.
Right? So you put great companies in, you make sure that they're right, then you allocate them, and then the model works that do you take a part of the companies, or how does it work?
Our model works in the sense that we on the funding tree side, we have it's a transactional model. Yeah. We take a very small fee because the bulk of what we are building is autonomous. In other words, we're not building lots of layers and people and intermediaries. We're trying to do a lot of these things with technology so that, once we have, the algorithms over here, the profiles over here, and, it's a more efficient system to try and match those things.
I got you.
So we take a small fee. That's a transactional fee if the transaction goes through smoothly.
Wonderful, right? And who cares? Like if you're raising some good money from the right investors, then we're all very happy to pay a fee. Tell me, the investors that are looking in crypto, how have you seen them change over the last year or so? I don't want to say how many are there, because I know my mom is a friggin' investor, right? Yeah. Mm-hmm. But I mean real proper investors, people who are looking at ICOs and they're making it a large portion of their business, of something that they're going after. Are we talking about like 10, 100, 1,000, 10,000?
No. I think we're talking about a small number. I think we're maybe talking about hundreds of thousands of people that are interested and maybe are dabbling with it with their credit cards or small amounts of money. Yeah. But the actual investors, and we're talking about, people with venture capital money or family offices, everybody wants to take a small position in it, to be aware of it, to dabble in it. I would say when it comes to stuff on a large scale, there are a few, people out there that are, have invested some money in this space, but it's not, it's not spread out. One of the things that we found, particularly when we were involved in crowdfunding, was that initially there was this belief that you have this, millions of people that are going to jump on the bandwagon and start investing in companies. What we found, and we looked at real estate as an example, what we found was that even the top platforms, the realty moguls of this world, the Fundrise, those guys actually had maybe anything from 100,000 to 200,000 subscribers, out of which maybe 20,000 of those were active investors. Yeah. Now, we've looked at some big funds that we've actually provided, advice and help in the go-to-market strategy. And what we learned from them was that even though they're crowdfunding these deals, the actual number of investors in their 200 million fund was, the first fund was 50 people. The second
and
fund
there
was
many of them were the same people that were investing
pretty much.
previously.
Yeah, they might
there
have
just was no
invested-
trendy name to it, right?
Exactly. They might have, and I think the same thing will happen with, the cryptocurrencies, that these investors will dabble with a smaller amount, and then they'll see the potential and they will increase, their allocations of those funds. But
It is vital. You brought up another point earlier on, which I think is really interesting. It's vital that the ICOs are good. It's vital that the companies that are raising the ICOs are good, because we already have the problems of pump and dumps with some of the investors coming in. But imagine if suddenly all these ICOs start falling apart, and how many investors we lose, and then how hard we have to fight to get them back in again.
Well, I think it's inevitable that you're going to have a backlash, and over the next few years, you're going to see a lot of these ICOs fall.
Yeah.
I think it's inevitable, just like the .com era.
Yeah.
And we know there's no difference here.
Because there were good .com companies.
Exactly.
There was just a lot of crap in there as well.
And I think the important thing to remember is, through all innovation cycles, this happens. This has been happening for centuries.
Yeah, fair.
So, the only difference now is that we have power and media capabilities that are on a different scale. So today, an ICO cleverly set up with all the backing of, the media and, some high-profile advisors can suddenly make it seem like it's the greatest thing on the planet. You really got to get in on this. But it could actually be just nothing more than a pump and dump by some very sophisticated people. Yeah. So today we run that risk because the ability for us to do things on scale and very quickly has changed. Yeah. Previously, even as far back as 10 years ago, when we launched a campaign, if you look at the process associated with that campaign was, there was print, there was media buying, that process takes a long time. Now, today, within a matter of a week, you can get everything set up, from website to press to PR to, all the different things you need to take money in. Yeah. So that's changed, and that's where I think you're going to see some very high-profile cases that are going to, fall apart.
I like that. And I want to spend the last 5 or 10 minutes or so really focusing on your advice to a startup who has already created a phenomenal platform, which is a perfect platform for ICO, who have already created a good community around them, who have already got a good advisorship, good advisors who are respected within the space, and they're already educated. What's the steps, the 5, 10, 15 steps to take them from that place to a place where they can raise $20, $30 million to realize their vision?
So realistically, anybody that even deserves to get $20 to $30 million in their raise has to have a beyond a minimum viable product and has to be able to demonstrate that there is a market. So that would be in the form of either millions of viewers, subscribers, users, or generating revenue. Yeah. Without those things, they're not going to get any money from third parties out there. They may get money from their friends and family because they've seen this particular group that has a track record from the past of having successfully exited out of Google or wherever else. Yeah. They may get that money, but they will come from private investors. Yeah. Even if it's high net worth individuals or institutional investors, but they will be known to each other. Now, if you go to, the third parties, it's impossible to get any kind of money. So that's the first advice I would give any startup is, where are you in that cycle? If you haven't reached that cycle, I don't care how great your website looks. I don't care how great your team looks. I don't care how great your idea is well thought out. Because if it's not actually put into practice, who knows if this idea will actually work? Yeah. Because without getting validation, I'm old enough to remember Betamax and VHS. And there are a number of other examples similar to that, in that, Betamax was a better system for recording, for video, and yet VHS won out in the end. But it took several years before they realized this is not going to work. Yeah. So I think it's important to, when we're talking about innovation and new technology, you must build user case and some form of adoption.
Yeah. Strong validation.
Exactly.
Okay.
And without that, I think my funding tree idea is great, but I don't know if the other people outside think it's great.
Yeah, perfect.
Everybody tells me that it's great, but I don't know when they'll start using it.
Yeah. How are people acting? Are they acting with their dollars, or are they acting with their advisorship? Are people getting involved? Okay, so we have that then. We've now gone through the market validation. What comes next?
Okay, so really the next
and everybody's telling them, hey, man, you got to raise like $20-30 million. Okay.
I've worked with some of the biggest companies that are raising hundreds of millions of dollars. I'm actually advising a fairly large fund at the moment that has already raised about $200 million. It's a real estate fund. Now, one of the things that they have in common is that they do everything. They have an online presence. They attend every seminar, webinar, fireside chat. They have social media. They want to be at every event as a sponsor.
It's like a war campaign.
Right.
Like
so you have to be prepared to do all of those things. Just do not rely on a single powerful platform that says, if you come on here, pay us X and we will help you raise that money.
Yeah.
Because you will be, the other 95% that go on that platform that won't get any money.
Yeah.
So, that's what you have to do. You have to do all of those things and be prepared to grind, constantly. And today it's things like Telegram and all these other channels and websites. But every one of those things, I would say you have to do all of them.
Yeah.
Now, in order to do all of them, obviously you need to have...
You need a full-time resource. Really, you need a full-time ICO resource.
Resource and money.
Yeah.
More importantly, money will buy the resources.
How much do you need? How much money do you need to launch an ICO? Because I've heard everything. I've heard like 250, 500K. It seems expensive to me.
I'm told right now, even figures in the range of anything from 1 to 2 million. If you look at some of the more successful...
how much will it cost to do an ICO?
Oh, how much will it cost? So actually, under $100,000, you could get everything up and running.
Including legal.
Let's say your idea is great and you've done some of the validation and you can get things up and running for under $100,000.
Okay.
Right? Now, the ongoing marketing campaigns, if things aren't going according to your plan, they may cost you more money, but to get up and running and fully be out there, and to test the market, for under $100,000.
Okay, beautiful. And you're talking about people who are doing ICOs for $1 million or $2 million, because we hear about them much bigger, right? We hear like 20 millions.
Yeah, and obviously the more money anybody has, the more exposure they can get.
Yeah.
Their go-to-market strategy could be they're going to sit at every event, every investor pitch. Some of these are very high-profile meetings where people are having to pay $20,000, $30,000 for sit-down dinners. So obviously the more money they have, the more they can travel up and down the world looking for this money, looking for the investors. And, that's where their budgets would be spent. But obviously, as a startup, you shouldn't be thinking in those terms. You should be thinking, in bootstrap terms. Even if you have investors' capital, you're now the custodian of their money.
Yeah.
So you have to act in the terms of how can we save every dime, every dollar.
Yeah, I like that. Okay, so we've got our budget put together, we've built our team, we've done our market validation. What comes after that? We're actually, I'm sorry, the point that you just made there, which is really important, is we're just like ants everywhere in every event. Is there a targeted outreach? Obviously, platforms like yours are really important to make sure that you're getting access to investors who maybe ordinarily would not have picked up the phone to you, which is a little bit of a challenge.
Well, I think, again, investors want to meet people. They want to try and do things face-to-face. Now, I know in the crypto world, there's a lot of online interaction, and people want to try and keep it that way, but actually serious investors that will part with any amount of money.
They want to see you.
They want to see you. They want to meet you. And not only do they want to meet you, they want to see you on a frequent basis to see that the money that you invested last month is being put to good use. And they'll want to see that if you were planning to develop something, how's that development coming along?
Yeah.
They won't have regular meetings with you. So that's an ongoing process.
Yeah, I love that. And I want to, so you have that all going together. Is there a final portion? So we've hit the investors, we've built the community, we're like ants all over everything else. Is there anything else that we've missed that a startup should do?
Um, I think the bigger focus again as a startup is that, how do I generate revenue? How do I get that first order?
Yeah.
And even if you've got the first order, how do I get the next order?
Yeah.
So I think that is probably something that gets overlooked and underestimated in that, okay, we've got the money, and they take a sigh of breath and think that's it.
Yeah.
But, that money was there as an investment for you to do something with, for you to, now live up to your predictions of we're going to be at the next Google or the next Facebook or we're going to have 10x improvement in the next 2 or 3 years.
And I like that, because you have one very consistent message here, which is build something real and make sure that that something real is continually getting market validation, whether it's driving revenue or driving users or driving community. If it's not doing that, and it's not even, and it's extra interesting because I normally look at that as a step that actually goes up the ladder. But what you're looking at it as, it's almost every step you're re-looking at it and re-looking at it and rechecking where you were. I want to finish up if we can, and then I really want to make sure that everybody gets your details, so anybody thinking you're doing an ICO can reach out to you. But can we just finish and maybe step back from my only focus on investment and think of, as any startup out there anywhere in the world looking to launch their own ICO, their own initial coin offering, what would be your general advice be to them to have a successful conclusion?
I think it's hard to give general advice on this. I think, research, education, surround yourself with people that are actually knee-deep involved in this.
How do they know those people, though? Like, how can they tell? Because you bring up an interesting point there. Like, surround yourself with legitimate people who should be surrounded by good people, right? But there's a lot of not legitimate people who are here.
Well, again, it stems from our need to get out and meet other people in this environments like this, and environments like, this Dojo expert camp, Hub 101, places where people congregate and meet and are also, doing things. Somebody's developing something. So you surround yourself with people where there are things are taking place.
Yeah.
And I think, a lot of times we've seen startups that are actually living in a shell and thinking, okay, I've got everything now, where's the money coming in, or where they have to get out. They have to constantly be out there. Now, today, obviously, they only have to Google, crypto events, and they're going to find a ton of them on Eventbrite or any one of those things. So, information and locations are easily accessible to everybody now.
Yeah.
And places that we have today are mostly free. In other words, you can come to any one of the Hub 101 events or any one of the events here, and we're not asking people to pay a ton of money just to be there. No. And I think that's changed a lot, because before you had these elite groups that the first thing they did was charge people a ton of money to be there.
Yeah, so just get out there, because you're right. Most of us want to create community. All of our own businesses, we know that the whole basis of our business, what makes us survive or not, is that we have a great community who want to be around us, who don't feel like they're taking advantage of it.
Also, and relevant community,
Actually, that's a better point to finish on. When you're launching your ICO, a relevant community is everything. Surrounding yourself with a bunch of people who like you, or a bunch of people who feel sorry for you, or a bunch of people who just hang around because they got nothing to do is not a community. A community are people who can help each other all get to the objective that we all want to achieve. So be real with yourself on the actual community that you're building, and push the people out who are not of value to what you're doing at this precise moment, because you don't have time for it. And bring the people in who are going to be of more value. I love that. Thank you. And can we give your details out? Do you mind? So anybody looking for it can reach out to you?
Anybody can reach me at any time on LinkedIn. It's Rayan Arif, and you Google that and you won't find anybody.
And that's
other
Rayaan, right?
Rayaan, and the last name is Arif.
Yeah.
You can connect with me on LinkedIn. I'm always open to people connecting with me there, or go to fundingtree.com.
I love it. Rayan, thanks, buddy. It's been a pleasure. You've given lots of amazing advice. We're going to be on the panel later on this afternoon looking at some great ICOs. I'm looking forward to it all.
Yeah, me too. Thanks for having me.
You got it. Hey, we're back same time next week, Tuesday morning, 10 o'clock. Looking forward to it. Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.